Today I want to go over my favorite investment, or should I say preservation of wealth, and that is gold and silver. And I'll go over what that means in just a little bit here. Before I get into this video, I just want to clarify none of this is investment advice. Any opinions expressed in this video are strictly my own, as I am not a financial advisor. Everything mentioned in this video is what I'm doing for myself, and you should contact your own financial advisor for what you should do. All this is strictly for entertainment purposes only. Now, these two metals are my all-time favorite thing to buy. It's actually quite addicting. There's just something about picking up a piece of dense metal knowing how precious it is when compared to other base metals like copper, iron, and aluminum. Before 2021, I never really saw the appeal of either. I personally thought it was just a hobby and kind of a waste of money. That was up until I learned about the history of both gold and silver. They are used to signify our rankings or decorate our achievements. They are the prized possessions in movies and pop culture. The colors are associated with the sun and the moon. They are to showcase our wealth on our bodies, whether they be the real metals or not. And they are even used as the colors of our coinage to subconsciously leave us to believe that they are of value. Now, in terms of industrial applications, both gold and silver are highly conductive metals of both heat and electricity, with silver ranking as the #1 most conductive metal and gold ranking third behind copper. However, gold connections outlast silver and copper, as gold does not tarnish. Both are used in small quantities in electronics and electrical components because of their rarity and price. Both silver and gold are known as biocompatible and can be introduced into the human body without introducing toxicity. This is why these two metals are usually used in dentistry and other medical applications. Silver is commonly used as a biocide because of its antimicrobial properties, as silver ions will block the bacterial respiratory system and thereby destroy the energy production of the cell. However, as an investor, silver is a way more appealing metal to me than gold is, as I believe it has so much potential for significant returns. Silver is truly a perfect storm for any investor, as silver and gold are mined out of the ground at a ratio of 8:1, where if 1 ounce of gold is mined, there are 8 ounces of silver accompanying it. 19 ounces of silver are within the Earth's crust when compared to 1 ounce of gold. Financially, throughout history, we have always valued silver and gold anywhere from 10 to 15 ounces of silver for 1 ounce of gold. And in the 20th century, the average ratio was about 47:1. Currently, the silver to gold ratio sits at around 76:1, not including the price of the premiums, which would narrow the gap a little bit. Global demand for silver has reached an all-time high of 1.29 billion ounces for the year of 2021, with physical investment demand surging 32%. Approximately 50% of the annual silver supply is used in industrial applications. Silver is second only to oil in the amount of industrial applications. With global mine production at 918 million ounces per year, this means that currently globally we are using more above ground supply than we are able to dig out of the ground. Globally, we are in a silver deficit. As we shift to a greener world, we need silver to make our technology more efficient due to silver's conductive properties. Because of gold's high price tag, there is an incentive to recycle it from jewelry, electronics, and other applications. And because silver's price is low, there isn't really that much of an incentive. In fact, most of it is disposed of in landfills, as the silver recycling supply has decreased from 232.61 million ounces in 2011 to 169 million ounces in 2019, as a low silver price discourages scrap sales. Production is also set to fall. According to the CPM group, the top 10 largest silver producing countries have produced 12% less silver from 2016 to 2020. Not only that, but silver is often a byproduct of mining for other metals including gold, lead, copper, and zinc, as there is very little incentive to directly mine it. Byproduct producers of silver are also set to contract their investment in new mines and mining operations. When base metals mining production starts to decline, which I believe it will due to an inflationary recession coming our way, where prices will continue to climb and production will continue to stall. And when overall mining declines, so does the supply of silver. And if you haven't checked out my video on my economic prediction, please do. I'll leave the link down in the description below for you to watch later. Aside from those reasons, silver and gold double as both inflationary assets and monetary metals. Both have been our money on and off for over 5,000 years, and in regards to our current financial system, when currency supply expands, the precious metals supply doesn't unless it is extracted from the ground. And now I'll move on to why I think holding these metals are so vital in these coming times, as I believe they are an indispensable financial asset going forward. Money is a man-made invention. It was invented with the purpose of replacing the bartering system, as trades weren't always equal and the items up for barter usually had finite lifespans, or even the service you would need couldn't be met because you didn't have a suitable trade to offer. The coincidence of wants is an economic phenomenon where two parties each hold an item the other wants, so they exchange these items directly without any monetary medium. And because of this phenomenon, the bartering system is very inefficient. This ended up creating a need for a new system of exchange where gold and silver lay at the foundation. And this is why money was created. Now, this $5 Canadian bill, this is not money. What this is actually called is currency. For something to be called money, it has to have these properties. It has to be a medium of exchange, a unit of account, durable, fungible or interchangeable, divisible, and a store of value. Gold and silver meet all of this criteria as they can be made in different sizes. Each different size of metal represents a value. They are portable, have an infinite lifespan, can be swapped with another piece, and most importantly are a store of value, as a certain amount of these precious metals are within the Earth's crust. They hold a lot of value in a very small space. Now, currency meets all this criteria except for one, and that is the store of value. It has value because our central banks and governments deem it to have value. And as a result, we, the citizens and consumers, also believe it has value because we have the experience of being able to consistently purchase something for around the same price each and every time. And what gives anything its value is its scarcity. And right now, the value of our currencies get lower and lower with each passing second as the currency supply continuously has to expand within a debt-based system. It's not a bad thing to increase the currency supply as long as our wage growth also keeps pace with the rate of currency creation. That's why using gold and silver as money was a superior system in the sense that it restricted our growth in the rate of currency creation because it was dependent on how fast we could pull it out of the ground. There was hardly any major changes in inflation, and this is how big families were able to afford to live off of one household income in the early to mid 1900s, when our currencies were backed by gold. That is what gave us confidence in our currencies to retain our purchasing power. And right now we are not seeing our wages keep pace with our GDP growth in both the US and Canada. Now, it was hard for me to find a graph that had both lines plotted on the same graph, but if you were to combine these two for Canada, you'd see that around the same time as the US, the wages and GDP begin to separate. This actually wasn't too long since the US announced that they would separate the US dollar from the gold standard. How the US became the world reserve currency is because they were the leading manufacturing economy in the world for both world wars, as they weren't involved for a good portion of both. They would ship their goods to countries involved in the wars, and those countries would then send them back their gold. The US then became the country with the most amount of gold in their reserves. And in 1944, the Bretton Woods system was created. This made the US dollar the world reserve currency, as the dollar was pegged to gold and all other currencies were pegged to the dollar. This meant that the US dollar was as good as gold, as central banks and other monetary authorities would hold the dollar in the reserves as a safe haven asset. The dollar was also convertible for gold for international financial entities. But then the US started to print more currency than the gold they had in their reserves. They spent currency to pay for the Korean and the Vietnam Wars and for social programs. By deficit spending too much, other countries caught wind of this and tried to redeem their dollars for gold held within the United States. And by 1971, the US dollar, along with every other currency, all became fiat all at once. Fiat money is a government-issued currency that is not backed by a commodity such as gold. Fiat money gives central banks greater control over the economy because they can control how much money is printed. Now, with the currency creation powers in the hands of governments, central banks, and commercial banks, our wealth is slowly being siphoned away from us as they constantly dilute the currency supply. as our purchasing power declines year after year after year. Because a currency is not backed by the production or acquisition of a commodity like gold or silver to limit the creation of a currency, it can lead to reckless deficit spending and the dilution and debasement of a currency. In what is referred to as the Cantillon effect, this effect describes the uneven expansion of the amount of money, as the people and entities that are closest to the creation of the currency supply get to spend it first into the economy, causing an uneven rate of inflation. Money or currency is a question of confidence, and that confidence is slowly starting to shrink as more and more currency is printed in times of panic. This further dilutes the currency supply, and with it decreases the purchasing power of both me and you, as the lower and middle class are not the first ones usually to spend it into the economy. And every fiat currency in the world is dropping in purchasing power as the money creation is outpacing our growth. There have been 775 fiat currencies in history, with 180 currencies still standing, with the British pound sterling being the oldest fiat currency dating back to 1694 and having lost 99.5% of its purchasing power by 2011. All fiat currencies eventually go to zero, as they have a 0% success rate. So what if I told you that every dollar is loaned into existence with interest expected on top of the principal? When currency is created through the issuance of bonds, the creation of new loans, or the expansion of the credit supply, every one of those methods expects interest on top of it to incentivize the lenders to lend out into the economy. All of these ways create new currency, but they end up creating more debt than actual currency itself. That's why economists and financial experts say inflation is a good thing, because we need new money in order to pay off the old interest on existing debt obligations. If we were to stop expanding the currency supply, the principal would be paid off on the debt, but our financial system would enter a deflationary collapse as we couldn't make the payments on our old pre-existing debt obligations. Kind of sounds like a Ponzi scheme, doesn't it? That's why whenever a government talks about raising the debt ceiling in order to avoid a default of their debt obligations is nothing more than smoke and mirrors. They have to continuously raise it, otherwise our economy and financial system will fail catastrophically. This system has worked for a long time, but it's not a sustainable model. And I think it's on its last breath. I believe at some point this decade, we will see a new financial system being brought in to replace the old existing one. And here's why. Written on popular investor and macroeconomic thinker Lynn Alden's website, in the first half of 2020 letter by Hirschman Capital, they found that over the past 2 centuries, 51 out of 52 countries that reached sovereign debt levels of 130% of GDP ended up defaulting, either through devaluation, inflation, restructuring, or outright default within a pretty wide spread of 0 to 15 years. A hard default is exactly what it sounds like. It's essentially where a nation declares its treasury is bankrupt and can no longer pay back its creditors. And a soft default is where we pay back the debt with devalued currency, as currency creation is the main tool to fight against a declining economy and a collapse of their debt obligations, all of which will affect the lower and middle class the most through a rapid dilution of the nation's currency supply, making tangible items more and more unaffordable. Canada currently sits at 117% debt to GDP ratio as of 2020. Now that is very alarming, but what's more scary is that the US has a debt to GDP ratio currently sitting at 137% as of December 2021. What gave the US its dominancy ever since been taken off the Bretton Woods system is what is called the petrodollar system, where the US would buy oil from Saudi Arabia. Saudi Arabia would pay US corporations for services and technology to extract the oil. US banks would then lend out these petrodollars to emerging markets to spur global demand for oil. Other countries would then buy the oil from Saudi Arabia, and Saudi Arabia would then invest those dollars in sovereign wealth funds that invest in non-petroleum assets, including US treasuries, in other words, US government bonds, thus driving up the price of the dollar. This kept the value of the US dollar strong for over 50 years now. This system is what gave the US what is called exorbitant privilege which refers to the benefits the United States has due to its own currency being the international reserve currency. For example, the US would not face a balance of payments crisis because their own imports are purchased in their own currency. And I would argue that Canada has also had a little taste of this exorbitant privilege, as Canada and the US enjoy the largest trading relationship in the world. And with both countries being service economies, mostly having outsourced their manufacturing, along with record trade deficit, we are poised for a great deflation of our financial markets and a rise in the cost of living if the US ever loses its dominancy as the world reserve currency. The biggest example of this is with Saudi Arabia considering pricing their oil in China's currency, the yuan. Along with one of the biggest exporters of oil, Russia has declared that if the world wants its oil, they would have to pay in Russian rubles or a hard currency. And this brings me back to my investment case for holding gold, as Basel III is an internationally agreed set of measures developed by the Basel Committee on Banking Supervision in response to the financial crisis of 2007-2009. The measures aim to strengthen the regulation, supervision, and risk management of banks. And under the new rules, physical gold, also known as allocated, such as bars and coins, are being reclassified from Tier 3, the riskiest asset class, to Tier 1, which means it is now defined as zero risk. With gold now being reclassified as a zero-weighted risk asset officially, that makes silver a Tier 1 asset unofficially through association. I believe this move to hold gold is to restore faith in the financial system, and could even lead to an overnight revaluation of the metal to offset the global debt. Like what was done in 1933 when the United States confiscated the gold of its citizens and paid them a price of 20.67 per ounce. Then in 1934, gold was revalued to $35 an ounce, with the dollar being fixed to 15.7 grains of 9/10 fine gold. I have no doubt that this will drive gold investment and along with it silver investment as well. If you look at the central bank accumulation of gold, the eastern countries have amassed large amounts of it. Russia has acquired 2,298 tons of gold, up from 343 tons in 2000. China has acquired 1,948 tons of gold, up from 395 tons in 2000. India has also gained over double their gold reserves since the year 2000, from 357 tons to 754 tons. Countries like Japan, Mexico, Kazakhstan, Saudi Arabia have expanded their gold reserves, and the more developed Western countries have been liquidating their gold, with Canada being amongst those countries having liquidated their gold reserves to 0 tons. Right now, there is a lot of speculation on whether or not Russia and China will back their currencies by gold, as they start doing trade in their own currencies. And that speculation is growing more and more with each passing day. As high-ranking Russian lawmaker Pavel Zavalny, pardon my pronunciation, had this to say about doing trade with Russia. Let them pay either in hard currency, and this is gold for us, or pay as it is convenient for us, this is the national currency, as he meant the Russian ruble. The dollar ceases to be a means of payment for us, it has lost all interest for us. That accompanied by the fixing of the gold price in Russia of 1 gram of gold per 5,000 rubles is hinting towards a backing of the Russian currency with gold. A big driver as to why I love these metals is not only for the wealth preservation aspect of it, but also because I see a tremendous upside for both metals, as I, along with many other investors, believe their prices are manipulated, as higher gold and silver prices indicate a dying currency and a shift away from that currency to the physical metals. So the consensus among precious metals investors is that the prices are being manipulated by paper derivative contracts issued out by bullion banks and metal exchanges, where there are more paper contracts being issued out than there is physical metal to back it. It is hard to know how many paper contracts are out there when compared to metal above ground, but there is proof of manipulation of the prices of these metals, where in 2020 JP Morgan entered a deferred prosecution agreement and agreed to pay $920 million, including a $436 million criminal fine to settle US government probes into spoofing in the precious metals and treasuries. And I promise you, JP Morgan is not the only one. Banks and exchanges can continue to manipulate the prices as long as they have inventory. With inflation being the highest we've seen in decades, war breaking out, cracks in the financial system, and the confiscation of finances by governments and banks, I believe investment in these metals will not only rise, but they will skyrocket from the amount of uncertainty in our economic landscape today. Which brings me to my next point about holding these metals. In this decade, I believe at some point we will see some bank bail-ins, where a bank can legally confiscate your currency in the form of deposits in the event of a bank failure to recapitalize the bank and in return, issue shares in the business. Once you deposit money in a bank, those deposits then become property of the bank, with the bank registering your deposits as a liability on their balance sheet that they owe to you. With record debt levels, growing consumer prices, stagnant wage growth, high asset prices, and the looming interest rate hikes set by central banks around the world, I believe at some point we will see a bank bail-in scenario. But I'll get into that in a later video. All that being said, I believe there is one more terrifying reason why holding precious metals is vital for anyone's portfolio. That reason being is that we are rapidly heading towards a cashless society with the issuance of central bank digital currencies. Both the Bank of Canada and the Federal Reserve of the United States, along with many other central banks around the world, are proposing what are called central bank digital currencies. And a central bank digital currency is a terrifying reality that gives complete currency creation powers to the central banks. Today, 97% of our currency in the economy exists as bank deposits and have been created by the commercial banking system. With the launch of the CBDC, like cryptocurrencies, they utilize the distributed ledger technology, aka the blockchain technology, where every transaction is recordable, trackable, and taxable, where the confiscation of currency is just as easy as the issuance of that currency. The currency can also be programmed to be spent in certain areas of the economy, along with being set with a certain time limit to spend it. Otherwise, it can be confiscated in the form of negative interest rates. This will ultimately make it impossible to withdraw your funds from your accounts in times of panic, and it will stop the hoarding of cash when economic conditions worsen. The elimination of cash also eliminates the anonymity of transactions, and that is why cash is vital for privacy in a society. They claim that there is privacy with a CBDC. However, that's not true in the slightest with the blockchain distributed ledger technology. They will always know what you bought, when you buy it, and where you bought it from. And I fear with the introduction of a central bank digital currency will just as easily bring about the introduction of a social credit score system. As with the removal of cash also removes the option of being able to transact in a different method. And in essence, you are at the mercy of the issuer of the currency. An example of this was when the Canadian government introduced the Emergencies Act and granted the banks extraordinary privilege in the ability to freeze and hold the assets of anyone supporting the trucker movement. Regardless of your views on the movement, this is frightening. To have your accounts frozen in this way is against our rights and freedoms, as people need their money in order to be able to live on a daily basis and purchase the goods and services that they need. This includes housing, food, transportation, shelter, and clothing. The Emergencies Act opened a door to what our future could look like, and I will not stand for it. And if I were to do something that a higher authority deems to be wrong, then I could also have my assets frozen, or even worse, confiscated. And this is why I hold precious metals. 1, to counter against government overreach. 2, to protect my wealth against reckless currency debasement. 3, to transact anonymously if I so desire. And 4, to even possibly profit off the manipulation and the scarcity of these metals. And that's all I got for you guys. Thank you guys for sticking around to the end of the video. I know this was a long one, and as you guys can see, this is why I didn't upload a video last week. If you haven't already, please like this video, subscribe to my channel, and if you have time, please check out my channel for the other videos that I've released over the past few weeks. And thank you guys again. I will see you guys in the next one.